Gareth Soloway and Greg Dickerson. Today they talked about the future and the past of the markets. Welcome to my channel, Time for Bitcoin.
A lot of people have been calling, this is the bottom and saying that it's exactly like that bottom of 2018. And then, after that consolidation, we'll be off to the races. And I want to kind of show you something that I've identified here and been looking at lately. And I'm no technical analyst, I'm no chartist. I just use these to kind of spot trends. So obviously here's where we're at here. This is November 8th, election day. 2018, this is November 8th, election day. My thesis has been, we've been in a pattern like this, waiting for final capitulation, because we haven't seen panic. We haven't seen mass sell-off. We've seen too many people calling for the bottom, too many people still looking for this to be the bottom and this to happen in this environment of the Fed tightening, raising interest rates, global macroeconomic recession, record hyperinflation in a lot of countries. I mean, there's just war everywhere, potential, other wars with Korea, North Korea, and, China and Taiwan. All of these events that people are expecting, the same old to happen and thinking that we're right here. This is also true for traditional markets, and I'll just keep it simple and go to this S&P. So there's 2018 when the Fed was tightening. Remember that? I remember this. Real estate market came to a halt. Markets were dropping. I told everybody, look, it's a good time to go to cash. Markets dropped, 20, 30% during that time right there in 2018. That was your Fed pivot. Here we are, November 8th, 4 years later. And that's the other thing. Bitcoin dropped 50% from that November 8th event, and markets dropped, 20 to 30% across the board. So I just wanted to
that's absolutely great. That analysis is great. In fact, I just brought that up. The Bitcoin chart was fascinating because, just a couple days ago, I did an interview and I talked about that exact thing. And what was amazing about it is if you look at the time on your chart, right? So in 2018, that consolidation, that quiet period started in June. And when it broke down? In November. Yeah. And here, same thing, June, November, and there's your breakdown. And this was before the breakdown started. And I actually kind of discovered that. I was like, let's look at when this started. I was like, oh my goodness. And then it was like, oh, November. And I was like, oh my goodness, this is the same almost to the day, period of the breakdowns, like June to November, and then the flush occurred. And I mean, that is kind of freaky how that does work out like that.
It is. And the other thing was losing the 200-day moving average. And then now the 100 became your main resistance all the way down the trend. Same thing back here in 2018. Once the 200-day was lost, then the 100 became your main line. That last tap of the 100 was the final capitulation. And we just had the last tap of that 100.
And then if you go back to 2018, what percentage did we drop? 50%? Was it a 50% drop there from that breakdown? I think it was, right?
50% drop, and the bottom, the bottom of that drop came in around December 16th. So, a little bit over a month.
So it puts us, if I'm correct, that puts us around 10,000. Right. We were right around 20 and we go to 10, and it's, I mean, again, just like me, is that there's no perfect, magic sauce, right? There's no guarantees that we're exact, but history tends to rhyme, if not repeat, because human nature doesn't change, right? Greed and fear. And so, as people are watching this interview, I think it's important to recognize that let history guide you. And doesn't mean go all in at these levels, but you start nibbling around the levels, and this way it gives you opportunities to add if it's not quite the exact point.
And history means more than fractal. So history, the Fed was tightening. They were raising rates. They were, QE was off. They were going to QT, and everything started dropping. Real estate market came to a screeching halt because rates were going up. Markets tanked. We've got the same thing happening, except there was no inflation back then, so the Fed could pivot. Fed can't pivot now, and they can't step in. So this is going to be interesting to see what happens. And if we get a hot CPI, like you said, that's just more fuel for the Fed, and good GDP numbers we had, good job market numbers we had, and a high CPI, and that's just more fuel for the Fed to continue with the path in December.
Thank you for watching the video until the end. Please consider subscribing to this channel to stay updated. See you in the next episode.